Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Skipper is the stock on our radar today. It has slipped in trade despite posting a good set of Q1 numbers. Margins expanded by 220 basis points to come in at 10.8%. Revenues are up 33%. Their transmission and distribution major, the company that is, witnessed revenue growth across all the segments. To discuss this and more, we are joined by Sharan Bansal, who is the director at Skipper. Sharan, good afternoon. Thank you so much for joining us. Well, it is a good set that the company has reported. 33% revenue growth in Q1 itself, with profit growth coming in at 16 crore rupees. What is the outlook looking like for FY24? Will you be able to maintain the margins at current levels? What will revenue growth look like? Hi, Sharan, can you hear us?
Hi, yes, thank you. Certainly, we have. Yes, I can hear you. We've been guiding for a 25% CAGR revenue growth over the next 3 years, and we are well on track to achieve that. And with regard to margins, we have seen improvements of margin in this year, and we are consistently hoping for better and better margins in the coming quarters.
What's going to drive the margin improvement? Do you have an exit margin range in mind? How much do margins improve on a year-on-year basis every year?
I feel that our PBT margins, which are currently in the range of about 2.5 to 3%, we should be targeting a margin of about 3.5%. And I feel that's very much doable. Looking at the order situation and order inflows, this quarter also we've had an inflow of about 1,200 crores odd of orders, which is the highest ever order inflow in the Q1 of the company. We have a closing order book of now about 5,300 crores. So certainly we do feel that margins will continue to go from strength to strength.
Okay. All right. So can you talk about the tender pipelines in domestic T&D? How are they panning out? New orders and pent-up demand. So what is the order pipeline looking like first? Is it coming more from the international business or the domestic business?
Our focus at Skipper continues to be the international market, as I have been mentioning for last several quarters. And we've seen very good growth coming from those a lot of international geographies. Having said that, we are seeing a very, very strong demand rebound in the domestic market for a couple of reasons. There's a lot of capex spending taking place from the government side, and also particularly in transmission industry. We have seen a lot of bunching of orders due to the recent Supreme Court verdict clearing the Great Indian Bustard issue, which was prevailing for a long time in the states of Rajasthan and Gujarat. Now that has been cleared, so there is a lot of bunching of orders that is happening currently. So we are seeing very, very good order inflows in the domestic T&D business currently. Having said that, I maintain that our focus continues to remain on international business. This quarter also, we have gone into a lot of new geographies, a lot of new countries in Europe, in the Middle East, North Africa region, as well as Latin America region.
What's the export contribution currently, and what would you like to take it up to?
Our export execution in the last financial year was close to about 40% of our engineering execution. This year, due to the high incidence, high inflow of domestic orders, the 40% may drop down to about 25%. However, this will continue to grow as we enter into newer and newer geographies.
Okay. So that is about the export business. How do you see generally the revenue mix going forward? Because right now you have engineering products at 65%, polymer around 23%. Polymer business did really well in this quarter. So what's the outlook going forward as far as product mix is concerned?
We do see, because of all the new order inflows at the domestic side, we do see infra becoming a larger share of the revenue in at least this financial year as well as next financial year. So we feel that infra, which is currently sub 10%, should grow to about 20-25% of our revenues. At the same time, polymer business, like you mentioned rightly, has gone from strength to strength. Our national ad campaign, which was launched in March with MS Dhoni and Chris Gayle, that is also working very well and giving us a lot of traction. We've seen excellent growth, almost to the tune of 50 to 60% in the first quarter itself. So definitely polymer also expansion in our overall revenue mix. So we feel that long term, perhaps maybe 50 to 55% on engineering side, and the balance coming in from together from polymer and infra is what we should be looking at.
Okay, all right. So give us a sense of what your debt will look like. The balance sheet, 0.7 times is the net debt to equity. What's the absolute debt right now? And are you looking at any capex which will lead to an increase in your debt?
We have managed to reduce our overall debt last year despite the growth in revenue. We are looking at some amount of capex, though not a very large amount, because thanks to now improved capacity utilization, we will look at some amount of capex as well. However, the focus will continue to remain on financial discipline and try and see how we can continue to deleverage the balance sheet more. We are also, the board is also considering raising of fresh equity by way of either warrants, rights issue, preference share, etc. So we have another meeting on the 16th of this month to finalize on that, on the fresh equity raising as well.
Okay, all right. Thank you so much for joining us today and talking to us about your plans going forward. So that's Skipper Limited talking about their outlook going forward. The stock is down 8.5% as we speak, though. We'll slip into a short break. Up next, we'll focus on the stocks that are moving around in trade on the back of news updates. Stay tuned for that.